Good afternoon. Thanks for tuning in. You're watching Ask BQ on BloombergQuint Live. I'm Navneet Saluja D'Souza.
Hi Navneet, I'm Alex Matthew. If you've got questions on equity, then this is the perfect show for you. You can send those queries to us on Twitter, Facebook, YouTube and WhatsApp. You can also call us on 022-454-04141 or you can mail us on askbq@bloombergquint.com.
All right, before we move to individual queries, let's quickly tell you what's happening with the markets. We reclaimed the mark of 12,000 today, so good going. In fact, the benchmarks, they seem to be outperforming the broader market indices. You've got Nifty, which is firmly trading above the mark of 12,000. Remember the recent high of 12,034. We took out that level as well, but remains to be seen if we can close above the mark of 12,000. Remember, in the past, Nifty has closed above this mark only 3 times, and Sensex also sitting. In fact, Sensex touched live highs in today's trade. That's sitting with gains of about 300 points. Bank Nifty continues to do well, up 0.5%, 31,400, just close to 400 points away now, a little less than 400 points away from its all-time high levels that we had seen for Bank Nifty on 31st May of this year. Broader markets are also trading in the green. You've got the mid-cap as well as the small-cap indices sitting with gains, but the market breadth will also come up on your screen, giving you a picture as to what's happening with the entire listed universe on National Stock Exchange and in favor of the advances. So good going for the markets. You've got Media Index, which is up 3.5%. Pharma also continues to do well, while some profit booking may have kicked in for your defensives in the form of Nifty IT, which is down 0.3% as we speak. Let's take a look at the Nifty contributors list and check which are the stocks which are contributing to the gains. And goes without saying, once again, Reliance features on top of that list. Yesterday also it contributed nearly 45 points to gains, and that continues today as well. The counter, it has been trading around its all-time high levels. You've got the other biggies as well, HDFC Bank, which is sitting with gains, while some losses seen for Kotak, TCS and Infosys. As I mentioned, IT as a pack is not doing well. The heavyweights, TCS, Infosys, are also trading in the red. Volatility index has cooled off a bit, so good sign for the bulls at least going ahead. 15.1 is where the volatility index has been trading. Very quickly then, couple of counters I want to mark. Z and Dish TV both have been inching higher. Z is up about 6.5%. It's trading above the mark of 300, and Dish 2 has gained about 17 to 18%. Remember, the street has been waiting for some bit of announcement here. While you've got from the broader markets counters like Tejas Network and S-Chand. Tejas Network is locked in upper circuit for the second straight day, while S-Chand is also seeing gains of 20%. Divestment candidates Dredging Corp and SCI, both of them are doing well ahead of the cabinet meet today. And losers in trade includes the likes of Siemens, which came out with the numbers. Disappointing performance when it came to the margins, and Just Style seeing some profit booking after yesterday's gain. BHEL also down 2% in trade, Alex.
Now, Navneet, we've already got several questions that have been posed by our viewers, but before we get to those, let's first get Shruti Srivastav of Bloomberg News in, who's got an exclusive story. Global commentators have spoken about how India can capitalize on the ongoing trade dispute between the US and China, and it all depends on whether India can successfully woo large companies to set up shop here, and it is emerging that the government is trying to do just that. Shruti, thanks for joining us. What are you picking up?
Yeah, so, as we have been told by our sources, as the companies are looking to invest in alternate destination, they are looking to relocate because of the ongoing trade war. Now, the government has prepared a list of some 324 companies which they think would be interested to relocate to India. It has instructed its officials to prepare custom-made pitches to these investors, these companies like Tesla and GSK, reach out to them and give them, basically handhold them, give them all the support they want. It is also proposed to, prepare land banks for them, the industrial clusters which are ready to move in, industrial clusters, to give them investment and location-based incentives, just the way countries like Vietnam and Malaysia are doing currently, because of which most of the companies are preferring to move to these nations. Now, the government thinks that by hand-holding these investors, it will be able to cut through much of the red tape and, lure investors to invest in India, because that way India would be seen favorably by these companies. So right now, it has shortlisted some 9 to 10 sectors, which it thinks can be sunrise sectors for India. Sectors like electric vehicles, electronics, telecoms. These are the sectors which the government has picked up, and the officials from these ministries, these sectoral departments, they have given suggestions to a government-appointed panel. These suggestions have been sent to the Prime Minister's office, and officials tell us that a decision on this will be taken soon. Once this is done, the government expects that, amid the falling exports and a slew of weak economic data, maybe giving a push to manufacturing will revive India's economic growth.
All right. Thanks so much for that update, Shruti. Of course, if you'd like to read more about that, it's going to be available on the website, BloombergQuint.com. For now, let's get our two experts in for the day. We've got Sameet Chavan of Angel Broking and Parthiv Shah of TRACOM Stockbrokers, who are here to answer all of your queries. Welcome to the show, gentlemen. I'll first come to you, Sameet, very quickly. Some big movers in trade today. Any ideas that you're picking up?
See, I'll go with Escort. After a couple of weeks of consolidation, we are seeing good traction in auto stocks today. And Escort is the one stock that we're already recommended within this consolidation around 663 to our clients. Though our near-term target is around 710, we won't be surprised to see this stock even extending this rally beyond 710. So looks good. It has finally come out of its recent concession zone. The volume activity is quite encouraging. So we expect Escort to head higher. So initial target to watch out for would be 710. But going ahead, we would expect this stock extending this rally towards 728. So any minor dip would be a good buying opportunity, and one can now keep a stop loss around 668.
Okay, so those are some technical picks coming your way. Let's start taking queries then. Our first query comes in from Vishal Singh, who writes to us on YouTube, and he has a query on ICICI Pru. He's bought 1,000 shares of the company at 410. He's a long-term investor, but he wants to know if he should look to book profits considering the entire space has been doing well, and currently ICICI Pru is sitting at levels of 507. Hi Parthiv, good afternoon. What would your advice be to an investor of ICICI Pru who's already making money? Should they look to book profits or stay invested considering the space on the whole has been doing well?
Good afternoon, Navneet. See, very frankly speaking, I think ICICI Prudential has done reasonably well of late in terms of trying to work on their strategy of increasing their market share in the protection business. And more importantly, last quarter, I think what we saw was that value of new business margins had inched up. And more importantly, the return on embedded value was also increasing. And that was the key reason why we saw this being a laggard in the life insurance space in terms of its valuations. Did do well in terms of multiples of the price to embedded value. Our sense is that this is a theme which will do extremely well over the longer horizon. And no doubt, I think we have always loved HDFC Life as the top pick in this space. But we still believe there's more legroom for players like ICICI Prudential to grow. And as and when the protection business grows, their margins will also inch up. So I would suggest that if he is a long-term investor, not to book out so soon, hold it for the next 2 to 3 years, the returns could be decent.
I want to come back to you, Parthiv, on a counter that has lost, significant ground, and now investors seem to be questioning their decision to go with it in the first place. Vatek Wabag was a name which held a lot of promise for some. We've got Divit, who bought in at levels of 530, and he's asking whether he should average at the current level.
See, Alex, the major learning lesson in terms of investing in infrastructure-related companies is how well they manage their cash conversion cycle. Order book is not everything. Tech Wabag was the ideal example where the order book was always very high. But the problem was always in terms of the execution, the receivables, and the cash conversion cycle, which was not up to the mark. And that's the key reason why a lot of institutional investors who were holding this stock, knowing the fact that it's a big water management scheme, did exit. So we are still having apprehensions in terms of suggesting a buy call here. And I would still suggest that, it's better to exit out of such names and go with a more stronger name if one wants to play the infrastructure theme, especially a name like Larsen & Toubro at this juncture should do well over the next 3 to 5 years.
Okay, so L&T is the preferred pick in the cap goods / construction space. Rangarajan Balkrishnan on Facebook writes to us, and he wants a technical view for the next 1 month on a counter called ACC Limited. Sameet, ACC, the stock's not done too much. In fact, I was just checking, it's trading below all its key simple moving averages, be it 50, 100 or 200-day moving average. What would your advice be if somebody wants to take a position here for the next 1 month?
See, clearly, Namit, the cement has been doing nothing since last 1.5 month, and if you look at the overall, volumes in cash segment, it has dried down completely, and that is clearly getting reflected in its price action as well. As far as ACC is concerned, this stock has been, consolidating in a very small band of 1580 on the higher side and 1480 on the low side. So the stock has been oscillating within this band for nearly 3 to 4 weeks now. So as of now, I don't see any encouraging sign. If this stock has to trigger any kind of optimism, this needs to surpass 1560, 1580 on a closing basis, and the volume needs to pick up.
Okay, not a question, Parthiv, that we get very often. We've got Kapil Mehta who's written us a mail and he wants to know whether Nalco is the best dividend yielding stock, or would you pick another one?
See, I have no doubts in terms of the dividend yield and the amount that they pay out as a part of their profits to the shareholders. But my biggest concern is that, despite being a very good dividend yield play, it is a cyclical player being a commodity player. And we have seen that Nalco, in terms of the recent price movements, has been gyrating a lot. So the investor has to have a clear mindset that, this is a type of a company which might not necessarily always do very well over a longer horizon. He or she will have to pick up this company at the lowest cycle of the commodity and probably exit at the peak, which is extremely difficult for most of the retail players. No doubt this is a company which has a lot of resources. It produces its own alumina, has its own bauxite mines, it has its own captive power plants. But again, when it comes to the earning stability, it is always very volatile. So don't go with just being a dividend yield play. You have to even consider the principal amount, which is the share price, which at times is very volatile. So I would suggest to avoid Nalco at this juncture.
Okay, avoid Nalco at current levels is what Parthiv has been suggesting. Okay, let's take a view on PNC Infra then. We've got a query from Puneet Sharma. He's bought 500 shares of the company at 150, and what he wants to know is whether he should look to book profits, and the current price of the share is at 188 or 189. Parthiv, you've said a big no for VA Tech, Wabag. You like L&T, but is something like PNC Infra, which features in your list of stocks which are looking good?
See, no doubt, I think PNC Infra has done reasonably well in terms of its earning performance as well. I'm particularly talking about the Q2 numbers. But my little concern in this entire sector has been the funding has not really been released the way one was expecting, especially in the second half. And we know for the fact that a lot of government financing for a lot of government-related capex is not really, I think, going to be very easy. We know there's a lot of revenue shortfall. So in which case, I believe that next 6 months could be challenging for many of these road players. But no doubt, I think in the road sector, we have names like KNR Construction. But my sense is that if one wants a fresh entry, wait out. I think there could be some pain for this entire sector. No need to rush.
Okay, Michael JB is looking for a short-term view on capacity infra projects. If we can pull that up and see where it's currently trading. It's at 210, about 1.5% up in trade today. But Sameet, he's asking whether this is a good entry point for the short term.
Can't say. There's no volume participation and stock has been consolidating. So I would rather wait for volumes to pick up, and this stock needs to surpass 230. So that has been acting as a very sturdy wall since last couple of months. So I would wait for further developments, probably a breakout beyond 230 along with decent volumes.
Okay, let's take another query on Motherson Sumi. Then Naveen Gupta writes to us, and he's bought 1,000 shares of this company at 205. He's a long-term investor, and he wants to know whether he should look to average now at current levels. Parthiv, correct me if I'm wrong. I think the September quarter numbers operationally looked better in terms of margins, but someone who has bought Motherson Sumi at 205, would you suggest him to stay put with this investment and also look to average?
See, very frankly speaking, I think it's a great auto ancillary company, and the reason why the stock price had massively corrected is knowing the fact that internationally a lot of global auto majors, namely like Daimler, JLR, who are definitely customers of Motherson Sumi, I think they had decreased their spend, and that was the fear. But again, I think at levels of 100, 110, a lot of that negative were factoring in, and more importantly, I think this is a type of a company which has inorganically done extremely well. The recent acquisition also, I think, is panning out to be reasonably well. So now probably is not not a time to exit. Now that the stock has done well recently, I would suggest that if not the cost averaging at these levels, because there are still some uncertain times going ahead for global auto majors, I would suggest hold on to your positions. Don't add new positions. But again, once you get an exit upwards of levels of 200, say at 230, 240, not a bad idea to exit this counter once.
All right, now we're going to talk about ColgatePalmolive. We've got Praveen Matthews, who's looking for a short-term view. It's coming off its high. In fact, it hit a high this month itself of 1642, currently trading at 1550. Sameet, coming to you on this one, he's looking for a 3-month view. Should he get in at this level?
I think the entire FMCG space has entered a consolidation phase, and it is quite obvious when we see stability in the market. We generally tend to see sensitive stocks, rate sensitive stocks moving higher. So clearly the focus is getting shifted from defensive to sensitive stocks. So I would certainly avoid, but if he's willing to buy this particular counter, I would rather see some kind of consolidation first, and then a northward trajectory probably towards 1620, 1650 is likely to continue.
Okay, that's a ColgatePalmolive for you. The next query is on stocks like Affle India and India Mart. Remember their recent listings, and both of them have been doing pretty well. Parthiv, I'm going to come to you. Matthew writes to us, and he wants a long-term view, and he's asking which is a better pick between Affle and India Mart for the next 3 to 5 years.
See, very frankly speaking, both are very, very interesting names, and both have great prospects to scale up their business. But I have a little more bias towards Affle India. Just the reason being that currently, I think we know for the fact that they have been doing extremely well in terms of how well this business segment is panning out, which is the mobile-related advertisement segment. And I think they have certainly created a niche, and more importantly, I think they are extremely well positioned to grow their top line by at least 30-35% over next 5 years. And more importantly, the OPEX levels are not going to be huge, which means that the incremental top line is certainly going to drive a lot of operational efficiencies, and generally H2 is strong for them. So in H1 they delivered revenues of upwards of 30%, so H2 could be even stronger. So I think the earnings momentum is with this company. No doubt on a trail basis the current multiples look a little pricey, but with such growth, I think this company can do extremely well from here as well.
Parthiv, BPCL in focus today. Stock is up 4%, but indeed over the last several months, also year to date, it is doing quite well for itself, 50% gain. So Sujit Arora has bought 500 shares at levels of 400. And I think with the rise, he's getting maybe a little bit jittery in terms of whether he should take some money off the table. On the fundamentals, would you advise him to do that?
See, very frankly speaking, this company has done extremely well, not on back of its existing fundamentals, but purely on base of the strategic disinvestment, or for that matter, the privatization that the government has been talking about. I think his entry point has been extremely good. He's sitting on at least 100 rupees of profit. I would suggest do not exit. No doubt, I'm not suggesting a new entry at current market price, because a lot of goodness could be factored into, but no harm waiting for another 3 months to wait and see who the suitor would be for this company. If it's a very credible name, then we might see further re-rating even from here. So at 400 levels, I think his entry point has been good, so I would certainly suggest to hold on to this counter for him.
Okay, hold on to BPCL. Let's see if there is any sort of development which comes for this one after the cabinet meet today. We already highlighted the other candidates, Dredging Corp as well as Shipping Corporation of India. Both of them have been doing well. Okay, pull up Bandhan Bank. Ishan writes to us, and he wants a short-term view on this one. He's asking if this is the right time to enter. Sameet, it corrected 4% yesterday. Currently, also, it's the lowest. It is at the lowest point of the day, down 2%. And there are some fundamental reasons because of the unrest in Assam. They get their 18% AUM from that state. But having said that, on the charts, if somebody wants to make a fresh entry into this one, is this the correct level, or do you foresee more correction?
No, I would certainly avoid this counter considering its recent price action. Last month we saw a massive bump up in this counter, yes, but in last 3 weeks stock has corrected and it has now retested its previous breakout point, but I don't see any encouraging sign as such on chart, so I would certainly avoid this counter at current level.
All right, let's talk about Tata Steel next. We've got Jigar, who's bought at levels of 550 for the long term. The stock is currently trading at 400, having recently made up some of the ground that it lost. Parthiv, I think some of the commentary with regard to the Europe business is building into just a little bit more positivity for this company. But how do you rate it on the fundamentals? Is it is it a place where you should average, and how would you rate it?
See, very frankly, not really suggesting an average in Tata Steel, not in the ferrous space, and more importantly, the steel segment. JSW Steel has been our top bet, and we were extremely bullish when recently the stock had corrected to levels of 220, 210. I believe in Tata Steel's case, I think the good thing is that they are increasing their focus in the domestic segment. Kalinganagar, Capex, and even in Jamshedpur, they are talking about debottlenecking, which is going to increase their Indian business. And India is the place where they have been doing extremely well. It is the missed capital allocation in the European business, which dragged down the earnings multiple and which dragged down the company's rise in terms of the share price. So now, over the next 3 to 4 years, the share of India business is going to increase, which is something that the long-term investors certainly going to like. They might be good suitors for bidding into the Odisha mine, which is going to happen by March 2020. So I suggest that, do not add new position, but if you can be a long-term investor in such steel companies, I think next 3 years could pan out to be reasonably well for names like Tata Steel.
Well, clearly UK operations is something which is weighing on Tata Steel for the longest time, but it's time to hit the rapid fire segment. Before we begin, just a small request to both our experts, Parthiv as well as Sameet, please keep your answers short so that we can accommodate as many queries as possible. Parthiv, this one comes to you. Pick 2 stocks among these 3, V-Guard, Crompton, Havells for the next decade.
I would select V-Guard and Havells.
Parthiv, coming back to you, Raymond demerger, how do you rate it, and would you buy the company post that?
I would not buy it at these valuations.
Sameet, would you advise entering into Yes Bank at current levels?
No, I'll avoid wait for a breakout to happen beyond 75.
Okay, Parthiv, view on ICICI Bank bought at 430 for the long term. Should you hold on?
Extremely bullish. Please hold on for the next 2 to 3 years.
Sameet, would you advise entering into HDFC Bank at current levels?
Yes, clearly short-term traders can go long at current level, target 1300, stop loss 1260.
All right, Parthiv, Bharat Electronics bought at levels of 198. What should be done at this point, if we can pull that up? It's at 112.
Cost average and wait for next 2 years.
Sameet, Ujjivan bought at 310. What are the charts indicating?
Attempting to give some relief move, but 300, 305, these are the levels to watch out for.
Parthiv, Baljinder wants to know the long-term view on VIP industry. Should he buy?
Yes, certainly you can buy and hold on for next 3 years. I believe this will do well.
And do you like Petronet LNG, Parthiv?
Yes, we like it for a 2 to 3 year time horizon.
Polycab, Sameet, is this current price a good level to enter for 3 to 6 months?
No, I think we were bullish somewhere around 680, 700, but not at current level.
Parthiv, Dr. Lal Pathlab for next 3 to 5 years, would you advise someone to make an entry at current levels?
Absolutely, I would rate it as the best company in the sector.
Parthiv, some of these life insurance companies have really rallied and gone past levels that people thought would not be breached. One of them is HDFC Life. Lohit bought at levels of 463. Should he take some money off the table?
No, I would still suggest to hold for next 3 to 5 years.
Okay. Sameet, the technical check on Vodafone Idea rallying for the 4th straight day?
No, I'll clearly avoid.
All right, Deepak Nitrite, sorry, would you stay invested, bought at levels of 227, Parthiv?
I would suggest a hold, but not new fresh entry at these levels.
All right, on that note, gentlemen, I'd like to thank both of you, Parthiv and Sameet, for helping us and helping our viewers, indeed, with all the questions that you did answer.
Remember, we're just a tweet, post, or a call away, so please keep your queries coming, and we promise to address most of them through our shows. For all our previous episodes, you can visit our YouTube channel or our website, BloombergQuint.com. Thanks for watching. Stay tuned to BloombergQuint.